Hey guys, how is everybody doing? Thanks for hopping on. First of all, the disclaimer, this is not financial advice, this is for your education purpose only, so you can build a framework around your trading. We're going to do some technical analysis, we're going to do some fundamental analysis, we're going to talk about all the different things that happened during Jackson Hole, the things that were said, the things that have an effect on the economy, so we're going to talk about that. But again, it's not financial advice, it's just purely educational and showing you guys my view on the market. So yeah, let's jump into it. Let's go and share my screen. I'm gonna turn down my music as well. All right, perfect. Cool. So yeah, I was just looking at Trading Economics. It's one of my favorite websites to do some fundamental analysis, or at least to check the data that's happening. Basically, all the economic data is shown on this website. You can go to indicators, you can go to countries, and you can check all the economic data that's visible, all the data that's being released of all the countries that you like, right? So all of the countries are there. I'm going to check the United States because I'm specializing in the United States dollar, of course. Does that mean that I'm not gonna have to look into other economies? No, I don't, because you're always trading in pairs. You're trading Euro USD, you're trading GBP USD, you're trading NZD USD, AUD USD, USD CAD, etc. So you always have to know the opposite side of the currency that you're trading, right? But I'm sticking mainly on the dollar because the dollar is, of course, the reserve currency of the world. It's the biggest currency of the world. If you know what the dollar is doing, you already know a lot about the entire economy. Okay, so I was just looking at the inflation rate right now. We are slowing down a little bit. That's because of gasoline prices dropping. That's no surprise, but the core inflation is still too high, and that's nothing to do with inflation, or at least with the energy. It has had also to do with supply chain or supply chains. Basically, that's the biggest factor. Okay, things are too expensive. People are buying them. There's still too much money going around in the economy. That's why interest rates are going up. So basically, borrowing money gets more expensive. People that are saving money at the bank are getting incentivized to keep that money there, so they do not spend it. So that's their way of killing demand. Okay, they want to kill demand and bring down inflation. So the Federal Reserve or any other central bank does not have the power to basically affect the supply side of the market. Okay, they can only control the demand side. They can only control the people that are spending money and make them increase their spending or decrease their spending. That's the only thing that they can do. They cannot change anything about the supply side. Okay, hi Vertigo, how are you, man? Thanks for hopping on, I appreciate it. So I'm just talking about the US economy, about inflation, and that basically, again, the market can only, or the Federal Reserve or other central banks can only affect the demand side of the market, not the supply side. Okay, the supply side is out of their control. It's China, it's Russia, it's all these other guys that are saying, oh, we're not able to, or we're not going to supply you guys from gas or other goods and services. Okay, so they cannot control that. They can only control the demand side and basically tell the people how much to spend, when to spend, and things like that. Okay, so I was looking at the inflation rate. It dropped a little bit because, again, oil dropped. The interest rate is at 2.5%. Last time it was at 1.5, so it made a jump of 0.75, which basically the previous time they did that as well. I was also looking at the countdown, so the Fed watch tool. You can look at the next interest rate decisions, the next FOMC meetings, when they are going to be. So the next one is at September 21, then it's November 2nd, December 14th, etc. Okay, and you can see how much the market is pricing in. So next meeting, September 21, the market is pricing in 30% of an increase of 50 basis points. Okay, so the market expects to go to 300. 70% of the market is pricing in a 75 basis points. So that's another 75 basis points. Now, today I read in an article that whenever in history, whenever the Federal Reserve hiked interest rates 2 times 75 basis points, there was a recession following. Okay, we already had 2 75 basis point increases, so a recession is very likely. Okay, we have other indicators also showing us that a recession is very, very likely. But again, another 75 basis points on top of that would even increase the chance of a recession if we're not already in one. Okay, so basically there's still room, but that would also mean if they only hike 50 basis points that the dollar will weaken, because already 70% of a 75 basis point hike is already been priced in. Okay, a lot of that is due to the Jackson Hole Symposium, where Jerome Powell basically said we're gonna hike as much as needed, as long as needed, to bring inflation down. And inflation is still at 8.5%, so they're gonna have to do a lot of hiking and a lot of basically a lot of tightening to bring down inflation. Basically, they need to kill demand, right? They need to have the control over people's spending, and they can only do that by hiking interest rates, making borrowing more expensive, making saving your money at the bank more worth being there, right? So I'm just gonna go through 2 documents. One about the inflation in Germany, basically Europe, right? Because Germany is the biggest country of Europe, of course, in terms of GDP. So yeah, inflation went up in August again. Next stop for inflation could be 10%, especially if we see gas prices and energy prices continuing to go higher. Hi, Michael. Hi. If gas prices and energy prices are continuing to go higher, then inflation will go higher as well. Okay, again, it's not the demand side, it's the supply side, and that's something that central banks have very little power over. Okay, so what are they saying here? The sharp rise in wholesale gas prices will be passed through to consumers over the next few months, and the announced gas levy will increase prices and push inflation higher. This is why we expect German inflation to get close to 10% by year end. However, with faltering demand, as consumers will increasingly be unable and unwilling to pay high prices, as well as negative energy base effects, headline inflation should start to come down over the course of 2023 and could even touch 2% by the end of 2023, as outrageous as such a call currently looks. If we get to 2%, then there will be definitely a very, very deep recession in the Eurozone, right? The market, the ECB, is thinking about increasing another 50 or 75 basis points. Now, that's all good and well. It will drive the euro a little bit higher, probably, but you have to think a little bit further than that, right? It's not only about what is the currency doing right now, what is the economy going to do, right? The economy is in a very bad state, growth is very low, we have high inflation, we have low growth, we have the labor markets that is okay, right? That's the only thing that's okay right now in the Eurozone. But if we're increasing if we're increasing interest rates, then of course, inflation will come down, but growth will come down even more, okay? And with high gas prices, it will be very hard to bring down inflation. So I don't know how much longer the euro or the European economy can withstand such high interest rates. And if they're gonna go higher even more, there's gonna be a very hard recession in the Eurozone, and eventually the euro will suffer of that, right? Or because of that. That being said, of course, we have the FX Daily document. A high bar for the Fed pivot leaves dollar in ascendancy. So that's good. We have a strong dollar because of Jerome Powell, because of what he said during the Jackson Hole Symposium. It seems that the Fed is not particularly displeased with the market reaction to Friday's hawkish Jackson Hole speech from Fed Chair Jerome Powell. Here, real US yields have moved higher, equities have fallen, and the dollar has strengthened. Okay, and that's all because of US yields. So if the people, the market, investors expect interest rates to go higher, US yields will go higher as well. And we all know that if US yields go higher, that the dollar goes higher as well. Okay, they are basically linked with each other. Also, if US yields go higher, then again, the yen goes lower. Okay, so USD JPY was a very good buy at the time of that speech, and it still is. Okay, we also have the Japanese economy, or the central bank of Japan, still easing. Okay, that's the opposite of what the US Federal Reserve is doing. They are tightening. The Japanese economy is still easing, so that's basically the opposite. Okay, so USD JPY is still a very good buy until whenever the Federal Reserve will stop hiking. Okay, what have we here? Also, yeah, equities have fallen, of course. That's normal when interest rates go higher and when the dollar strengthens. Weaker consumer sentiment is unlikely to blow off the Fed's course. Elsewhere, look out for policy meeting in Hungary. That's not so important for us. So here, the Fed applies the brakes. So with the brakes, they mean you should look at the economy as a car, right? The car is driving, and if inflation is going up, that means that the gas is pushed. The car is driving hard, the economy is going hard, growth is well, everything is going very strong and fast, okay? But inflation gets too high, they need to push the brakes of that car, right? And right now they are pushing the brakes by hiking interest rates to bring down inflation and of course bring down growth as well, so to slow down the economy. That's why they say the brakes. We tend to hear it ever more frequently that the central bank can only control the demand side of an economy, and in an era dangerously high inflation, its job is to take off the steam of demand. That's why that was a central message that Jerome Powell Jackson Hole speech on Friday. I have the speech here. I think I just shared it in the Discord as well in the fundamental side. It's a very short speech, to be honest, so just go through it. It's very easy to read. I shared this one as well at the same day, just right after his speech. I really recommend you guys to read this, because this gives you a really good view of basically how the US economy is going forward. Okay, again, Powell sees a lot of pain for households. I think it's somewhere here as well. For some time to bring the inflation. Yeah, I don't know where it is. But he said a lot of households will see more pain. So basically, we're gonna go into a recession, guys. The next year or so is gonna be a recession. Everything is going to be very, very slow, very bad. I see equity prices going down even more. Okay, so where's the US 30 here? If we're going to a daily chart, let's see. I expect this to go even lower, right? So we're not ready to go up. As long as interest rates are going higher, the dollar is strong. There is no reason for equities to go higher. The investors, the big institutions, they are just sitting on their cash. They are just waiting until the time is right. When we've bottomed out, okay, it can be here. I think it's going to be lower. Okay, when we are bottomed out, when the Federal Reserve is going to pivot to more an easing policy, okay, that's when again investors will start buying equities, buying cryptos. So I know seeing Bitcoin, for example, at these levels, it's very tempting to buy, but I'm sitting on my cash as well. I'm not buying yet. Just sit on your cash, just wait. Am I gonna try to pick the bottom? No, of course not, but I'm gonna wait until the bottom is in, and then I'm gonna see and I'm gonna buy the first higher low. Okay, going back to the document. It was the other one. If you guys have any questions, let me know. So our point here is that the Fed's policy is designed to slow demand, and that weakness in equity markets and some softer consumer data confidence and spending are not enough to blow the Fed off its tightening course. Okay, so even when you see low or softer demand on the economic calendar, that's not going to change anything. Okay, the wind or the current, this when you have water, right, there is current, you have cross currents, but the main current is in one direction. It's a tightening current, and it doesn't matter if one stream of water goes in the other direction, the big stream is still in the tightening direction. So it will be very hard to change the course of that stream. This environment should keep the dollar bid, of course. The dollar strength on the back of higher US real yields on one side is one side of the coin. The other side is the energy crisis and other domestic factors weighing on large parts of Asia and Europe. Okay, so yes, we have interest rates going higher in the US economy, but that's not the only thing that's bringing or strengthening the dollar, right? It's also weakness in Asia and Europe. Okay, we have very weakening factors for the European economy, especially gas prices. We have Asia also, Japan is easing. We have war or near war with China and Taiwan, right? So these are parts and these are factors that make Asia currencies and European currencies less attractive. And when you have that situation, people go to the dollar, right? The dollar is still the safe haven of choice in situations like this. Heavy positioning, so that's the only negative on the dollar. Heavy positioning is probably the biggest challenge to a further dollar advance. Okay, the dollar could go much higher, but a lot of investors are already in a buy for the dollar for so long that adding to that buy increases their risk. Okay, so that's the only thing that is holding the dollar a little bit back of advancing higher and higher, right? So a risk of that is a short squeeze or a long squeeze, a long squeeze, which basically is a very sharp decline in the dollar without any major reason to then basically get a lot of those buy orders, a lot of those big positions out of that market and then increase even further, right? So that's the only thing that we can see happening for the dollar, although I don't think it's going to happen. For today, look out for the US consumer confidence. Lower gasoline prices have consensus expecting a bounce here. For the Eurozone or for the Euro, release the hawks. Okay, so again, they are expecting to do a 75 basis point or a 50 basis points hike. That could give short-term strength to the euro, but in the long term, it will only hurt the European economy. But whether Russia restarts gas flows via Nord Stream 1 after 3 days of maintenance starting tomorrow will be a major driver of gas prices and also the European currency complex this week. So again, look at, for example, Forex Live. They will be the first one or one of the first ones to show us or tell us that Russia has restarted the gas flows. If the gas flows restart, that's going to be good for the European economy because, again, as long as there is not coming any gas from Russia, it's hurting our economy, it's driving gas prices higher, and basically that's another effect of high gas prices. It's eating away all the profits from European companies. So more and more companies are starting to say we're just going to shut down because we have to pay our employees, we have to pay our commodities, we have to pay our energy prices, and we are basically not profiting from our work. We are basically going into negative. So why stay open at all? Okay, and when that happens, people are getting laid off. They have no money to spend, and basically the economy goes into a downward spiral. Okay, I have been going over this multiple times. It's not a good sign. Okay, sterling, the pound, has been a little weaker than we thought, especially against the euro. Sterling typically shows higher correlations to equity markets than the euro, probably given the larger role of financial services in the UK economy. A tough environment for equities, which we are seeing right now, is therefore a real headwind to any sterling recovery. Okay, and that's why I sold GBP USD, right? Let's see how that trade went or is right now. Let's go to 1 hour time frame. Okay, so it went to our target very smoothly, very clearly, not much further, so that was the perfect target. Again, why did we choose that target? Because it started moving, basically it started moving from the R1. Even though if it started moving from the M3 or the R1, anything in this zone, when it moves from here, you want to take the conservative target. If it moves from the aggressive entry, the pivot itself, then we can expect a much further target, basically the aggressive target, which is right over here. So, but because of our entry was right here, it started moving from here, we took the conservative target, which is the most obvious target, of course. So no questions about the fundamentals, that good. I'm just gonna watch or take a look at the economic calendar. And let's see, so Monday, Tuesday, that's gone. JOLTS was pretty okay. Let's see. We have Fed speech or Fed Williams speaking. I know there were some Fed speakers today that are trying to bring down the hawkish sentiment. A lot of, let's see, Fed Williams, inflation is still way too high. Oh, that's just like like 40 minutes ago. Inflation is still too high. What is he saying about that? Okay. There are cross currents in economic data. Labor market has remained very strong. Overall picture is similar to where it was in July. Some positive momentum into second half of 2023. Inflation is way too high. Our focus is getting on inflation back down, far too high. So if you're reading these type of comments, I'm not going to read everything, but when you're reading these, it can give you a lot more insight about the market. Of course, you have like 19 or 20 Fed members that are they all have an opinion. Okay, he's maybe a little bit more hawkish. When we go back, we know that there were more Fed speakers today. Let me just go and find them. Fed Bostic, slowing inflation may give us reason to slow interest rates. So he's more dovish. Okay, so Fed Williams, he says inflation is too high. We need to do everything that we can to bring down inflation, aka hiking interest rates. This guy, Fed Bostic, slowing inflation may give us a reason to slow interest rate hikes. So he wants to slow it down. Okay. So yeah, you're always gonna have multiple opinions about from multiple people, but it's that main current, that main stream that are you gonna add more hawkishness to it, or are you gonna add more dovishness or dovish comments to it, and how is it gonna slow down that main stream, that main current from that direction, or is it gonna accelerate it? Okay, so you gotta have to look at the economy like that. You have the main narrative, and then you have all these data points, all these speeches adding to that narrative. Is it slowing that narrative down, or is it accelerating that narrative? Russian OPEC not discussing the possibility of production cuts. Maybe next, I think it's too early. Cuts. So here the report is in conflict with Saudi comments that production cuts may take place next meeting. So if they're gonna cut OPEC production, that means that oil prices are gonna increase again, and again inflation will increase as well because of that. Okay. Hey, hi Arthur, how are you doing, man? Thanks for hopping on. So yeah, we're gonna go to the charts. We did enough fundamental analysis, but again, I do like 70%, 80% fundamental analysis, and then the rest is just going to the charts. Again, if you're hopping on these charts, it's very easy to see where do you need to get in, where do you need to get out. Is this a potential buy or selling area? That's very easy. Okay, everybody can see. Let me see. How did I found that trade? So I think we were somewhere over here this morning. So let's do this on replay. Where is that replay button? Here it is. This was this morning. Okay. So when you see this, I think it's very clear that you're not gonna buy this, right? I have some guys telling me, "Oh, it's here. I need to buy." No. You don't want to catch a falling knife. This knife is falling, and it's falling very aggressively. You want to wait for a decent pullback and then go into that same direction. GBP USD, why not at the pivot? Why wait? Okay, that's a good question. That's a very good question. So you have to look at multiple indicators. Okay, you have to do multiple time frame analysis as well. When you go to a 4-hour time frame, you will see this is way too early, right? If you're selling here, that's way too early. Yes, you have a role reversal here, so you can mark up that. You can mark up this as a role reversal zone. That's good. That's fine. But if you're here, I mean, I would wait a little bit higher, maybe touching that pivot here before continuing to go down. It's too low, okay? So you want to wait, but of course you could try to take it right at the pivot. But my opinion, if prices already went here, it's gonna be dangerous, okay? The only thing that you could say is, okay, I'm gonna wait for this to break, but then you have to go to a smaller time frame. You could wait for this to break and retest the pivot. Right now it went a little bit lower, but it went straight back to that pivot, so that's too early, okay? You want to wait a little bit. There's no major bearish divergence or anything, so you want to wait a little bit, okay? That one, based on that 50 EMA, look how precise that is. That was a possible entry, but then you have to be on your charts, okay? So I would wait a little bit. The role reversal level is here. If you go to a 4-hour time frame, the 50 EMA is also far away. Even the 21 EMA is not even touching. So even when this is gonna be, or if this was a very, very aggressive trend, it at least needs to touch that 21 EMA. It didn't even touch that 21 EMA, okay? So that's an important one. Look at where are your EMAs. My EMAs are too far away from price to start shorting right now. That's why I've waited, okay? I was looking at NZD/USD and GBP/USD. I waited a little bit. I told you guys I'm looking for a sell setup, but it's only when I saw that spike through that zone. So let me play that. Where is my replay button? Okay, it's only when I saw this happening that I said, okay, if this candle is gonna close like this, that's when I'm gonna enter, right? So I entered right here. Why? Because we had this, there were a lot of stop losses here. I'm sure of that. There were a lot of stop losses here, and that spike took a lot of guys out before the market went down. I'm gonna just let it continue play. Okay, if you go to a 4-hour time frame, now you can see it didn't go all the way to that pivot. Oh, sorry, we have to look here, right? It didn't go all the way to that pivot, but at least it touched our 21 EMA. So that was something that I needed, right? We went to 17,500 as well, I think. So that's also something. It's, yeah, it's probably a little bit of experience as well. You could say, okay, I'm gonna try it here. That was gonna be a stop loss, but if you re-entered here, you were still up like 2%. Okay, yeah, you need a higher time frame as well. Okay, this was gonna be too easy. Sometimes it is easy, but sometimes you just feel that it's gonna be too easy. On the other side, I was looking at the dollar. Okay, the dollar was here, so the dollar was also creating a very bullish pattern, right? Bullish price action. This was very impulsive. Okay, this was a very sharp impulse to the upside, breaking this structure, breaking this structure, breaking this high. So all these highs, all that structure was broken by that move. So I was expecting a retracement to the previous structure, which was right over here. It was too early apparently. The market waited a little bit longer. Went a little bit deeper, right? A lot of stop losses were here as well. Got taken out by that move, and then the market started moving. What I'm expecting now is the same thing, okay? This structure, so basically, let me see if I can draw something. All right, we had that impulse, we had a correction, right? Very consolidative, and now these levels of structure right over here, they got taken out by that move. So that's a strong impulsive bullish candle. So I'm going to remove my drawings. An impulsive candle, a retracement, retesting these. I'm going to just do it with a zone. That's going to be more clear. right? These broken highs, that structure, because this is structure, right? You can see that this is all structure, okay? That got taken out, got broken, being retested right now as we speak. If you look a little bit closer, this is a strong engulfing candle, okay? There is still imbalance in this candle. This is the close of the previous candle, or the open of the previous candle, excuse me. So there is imbalance here. That got filled, and now we are ready to move higher, right? So expect this to go higher. Again, gold could move lower based on that. US 30 could move lower based on that. GBP USD could move lower based on that, right? All USD pairs could move lower on that. So be careful, okay? We could, if we go to the dollar, we could stay here for another day. That's possible as well. And I think the market is maybe more in a wait and see approach today than really moving on volume or with volume. So yeah. Any questions? Feeling it is experience. I'll get there. Yeah, man. Is there a specific reason for taking out those stop losses? Yeah, the market just wants liquidity, right? If everybody is in the same direction, nobody's gonna make money. So especially if you're trading with a lot of capital, if you're trading with like 200 million, 300 million, it's not as easy as us guys, right? If we trade with a $20,000 account, for example, and you're placing a buy, it's not gonna move the market, okay? But if you're placing a buy with a $200 million account and you're placing a buy, it's very hard to get in. It's already moving that market. So it's much more easy to get in with small buys, maybe take a sell or something like that, right? And just when you're taking a sell, just how do I have to explain it? They just want all those long orders out of the market, and all those long orders are basically feeding their long orders. Okay, so if you are entering here and you have a stop loss right over here, they push it down, they take you out, they take your money, and they move higher. Okay, that's how the game is played. So you have to take that into account. You have to be smart about that. So yeah, the dollar on the longer term, I still think we're gonna go higher, maybe 110, maybe even 112. I really see that in the cards, but it's not gonna go as fast as this move, for example. It's not gonna move that easy because we are already so high. But it's still, we are still in an uptrend. This is consolidation. We can still move higher based on interest rates, especially interest rates. Okay. Let's go through all of them. So expect the unexpected. That's something that happened. Okay, we moved lower since then. We didn't broke that low. That's not a break. Okay, we made a retracement into the next sell zone. That's nice, right? And now we are set to break on the AUD USD pair. It's also looking as a big head and shoulders. Okay, let's see. Let me draw that head and shoulders for you guys. Left shoulder, neckline, head, neckline. Whoops, I made a mistake. Left shoulder, neckline, head, neckline, right shoulder, neckline. And if it breaks that neckline, the thing that you want to do is you want to wait for a correction to that neckline. Oh man, you want to go here, right? You want to look for a sell zone here. You want to look for confluence with your 50 EMA, okay? And then you want to take that sell in that sell zone in confluence with that 50 EMA. And that's really where you want to look, okay? It's going to go the same distance as from the head to the neckline, right? So if you measure that, okay, and that's really trading with patterns, but if you're using this distance and you're going to place it here, okay, that's where your target can be. This can be your target on the longer term, and you can try to line it up with targets from that pivot. Of course, you can say, okay, I'm gonna take it a little bit more easy on the target, and I'm gonna place it right over here. So that's how you can trade. Okay. Every trade they put in HASA has a big impact because of their volume. Every trade they put in has a big. Oh yeah, it has exactly. So every trade they put in has a very, very big impact because it's such a big amount of money. And the less liquidity or the less liquid that a market is, the more it's gonna move. So if you have a 200,000 or a 200 million account and you place a buy on Euro USD, it's gonna move the market a little bit, but not as much as, for example, if you trade the silver market, because the silver market holds a lot less money. Okay, so it's a lot it's much thinner in liquidity. All right, so if you place a sell here, a very big sell, it's gonna move the market lower. If you place the same amount on a Euro USD or a GBP USD, it's gonna move less. Okay, so yeah, we did GBP USD. GBP, so the UK economy is in a very bad state, especially with super high inflation. People are protesting to not pay energy prices or energy bills anymore. So we can see the pound to continue to go lower, even with hiking interest rates. The same for the Eurozone. Even if they hike interest rates, I still see Euro USD to go lower. So yeah, that trade worked out very well. We are not near our target. Okay, so our target was right over here. It was to be expected that this low was going to be difficult to break. It's not breaking yet, but I expect it to go lower and break it. It might be for next month. Okay, it might be, and next month is already like in 2 days. So it's very possible. We could go to the pivot. We could even go to the M3 level. I don't think that's going to happen. I expect this to happen. It already went there just briefly. I think we're going to go to and see that correction, complete that correction. We have support here. We have a little bit support here. So this will be an area where I will be looking for 4 hour time frame. Okay, here we are still in that sell zone. That's a very nice sell zone, to be honest. Okay, so that's something that gives me a little bit of doubt. Okay, let's see. We had support here. We had this support. Basically, if you look very closely, it seems like this support did break. Right, it did break right over here with a strong candle, and this is a retracement, and it's not breaking that support. Right, it's not going through the support with a solid candle like it did here. Right, it spiked through, it pushed back, and now it's just hovering around over here, and it seems like it's not being able to break that resistance. Excuse me, it should be red. So we could expect this to go lower. Okay, even though the daily time frame is suggesting we might go a little bit higher. Basically, we touched the pivot very briefly. Will it be enough? I don't know. But I would maybe take my chances next week. Yeah, maybe even this week to go lower, right? But again, if you want to sell this, go to a 1 hour time frame. Wait for a break of structure. So this is not ideal to sell from. All right, you want to see, for example, this support right over here. Right, you have a low here, low here, low here, low here. Right, so this is support. You want this support to break. You want a retest. This pivot, or maybe the next one, should be right over here, and then here you want to place that sell and take it lower. Right, you could say, okay, I'm gonna get out at that support. That's your choice. But you need to know there's already been one touch, a second touch, a third touch of that support. If it's going to go lower and you want to sell here, there's a big chance that it's going to break that support and go lower. So what you can do is you can take a little bit of profit right over here and let like 70% of that position ride until you hit your target. Makes sense. Okay, so I'm gonna delete that. If you guys have any pairs that you want me to go over, I can do that. It doesn't have to be dollar related. It can be Euro AUD or something. I'm just gonna open my door. Okay, Euro USD, basically, yeah, fundamentally it's going to continue to go down. GBP, same thing, it's going to continue to go down. We just need to find our entries, okay, our sell entries. The next one on GBP USD is already waiting for us. Let's see. Can I draw a channel here? Let's do some drawing. Yeah, doesn't line up. Okay, I'm gonna delete it. Okay, otherwise it's just like a trend line, and when I don't like to use trend lines. But we can expect the market to come here. If it's gonna go lower today, this pivot will be lower, okay? But somewhere in here, I'll be looking to sell again. I made money today doing this. I'm gonna do it again tomorrow if I have the chance, right? And if I have the chance on Friday, I'm gonna do it again. If I have the chance on Monday, I'm gonna do it again. I'm gonna keep doing the same thing until the market shows me that it wants to go higher, right? And the only time that it will show me that it wants to go higher is when it does this, okay? When it breaks this high, then I know, okay, the market is probably gonna continue to go higher. It will retrace, and this will be the first higher low, right? It's gonna be higher, and it's gonna be a low. This is where I want to buy then, right? But only when I see the previous high getting taken out. Okay, I hope that makes sense. So for example, if we continue to go lower, okay, and tomorrow we create a lower high, I'm gonna sell it, right? If we're gonna go lower and we're gonna go here, I'm gonna sell it again, right? If it then makes a double bottom, for example, it can be even a little bit lower. There's probably gonna be bullish divergence on there then, okay? But then I see that previous high getting taken out, okay, this high. If that one gets taken out, that's my sign of, hey, it's probably gonna move higher again. The first sign was this double bottom, not really breaking the previous low, red flag, okay? And then basically that's a pattern that I'm always looking for. And then just gonna buy that higher low and I'm gonna take it higher, and I'm gonna continue to do the same thing until the market does this and breaks lower again, breaks this low, right? And we're gonna go down again with the same strategy. Okay, we're gonna do this and we're gonna go lower again. Okay, I hope that makes sense. That's how I trade. That's pure naked trading, guys. That's not even trading with indicators. I'm not looking at my 50 EMA. I'm not looking at my 21. I'm not looking at my pivot points. I'm not looking at any indicators. That's just price action, market structure, right? This is market structure. It's the single most important thing in trading. It's market structure, right? And then we add our indicators as extra confirmations, right? To be just more precise. If we have a 50 EMA touching, if we have a psychological level, if we have our sell zone, our pivot, that's just giving extra confirmation to our trading, to our entries, where to take profit, where to put our stop loss, right? To make things a little bit more easy. But you always, if you're just starting out, just learn to read price action and market structure is the most important thing, okay? So again, we are breaking that low, so we can mark up this as a resistance zone. It's being retested right now. It might be a very brief retest and then come down, but I will be waiting for the other retest, okay? I don't like a break like this and then a short retest and then going lower, okay? I don't like those type of trades. I like a little bit, I like that price is taking a little bit more time before making its next move down, okay? But this will be something that I will be looking for. I hope that it goes down a little bit more because then this pivot is gonna line up with this roll reversal level, okay? 50 EMA needs to come down, okay? I don't wanna sell here because that 50 EMA and even that 21 EMA is too far away, so I don't wanna be selling here. How is that 4-hour time frame? We still have a little bit more room to go. Yeah, but it's not ideal, okay? It's not ideal because it's already so close to that 4-hour target zone. But fundamentals are pointing in the right direction, so I might take another shot tomorrow here. Let's see, NZD-USD, that one, I didn't take it, okay? It would have taken us out. Let's see, yeah, that one made a sharp move up. There was a lot of imbalance in this move, right? That was a strong sell side pressure, a lot of sell side pressure here. This was that's another thing, okay? I'm gonna talk about that. you have multiple resistance zone, right? So these lows were taken out. Okay, these lows were taken out, so that's important to look at. If price comes back and you have multiple indicators lining up here showing you that there is a possibility, there is a high probability of the market not going higher and going lower here, then you should take that shot. But there is always, how do I say it, the most recent low, right? These are not the most recent. There's a lot of price action in between. The most recent low was here, right? And out of experience, there's a lot of times that, okay, this is the role reversal level. That's the big support, or the big, yeah, it was support at the time. It's gonna be very big resistance here, but there's always a chance that it's gonna retest the most recent low, right? More often than not, it goes to retest that recent low. Right now, it was far away, but it did go and retest it before going lower, okay? So that's possible. Just always take that into account. If you don't know which one to take, then just take the most recent one, which is the farthest away. Yeah, which is farthest away first. Yeah, anyway, you know what I mean, right? Because then your risk to reward is going to be bigger, right? If you're taking it here and you say, okay, it might go here, you're placing your stop right over here, then you have a very big stop, and it's only going to be a 1-to-1 risk reward, and you don't want to risk 1% to gain 1%. Okay, if you're taking it here, chances are that you're not going to get in because market is not going to get there. But if you're going to get in, you're going to have a much bigger risk to reward. Okay. The reason why I took GBP USD is because fundamentally it's much more stronger. Can I do EG? Yeah, sure, man. Let me go to EG. I just want to go to USD JPY because there was a very nice buy setup here. I didn't take it. Why didn't I take it? Again, that role reversal level was a little bit too far away. Based on the impact strategy, I should have taken it. Okay, we had the 50 EMA touching. It was right moving from that M2 level. Our stop loss was here, but you see my stop loss was going to be here and the role reversal level was here. So I mean, to be really safe, I needed to do this, right? I needed to put my buy order here, my take profit here, and yeah, my stop loss was going to be here, but that was too risky because if it wants to retest these highs here, then I already have to put my stop loss here, and that's only a 1 to 2 risk reward, and I don't take 1 to 2 risk rewards. It has to be at least a 1 to 3 risk reward. But nevertheless, nice move, nice reaction from that confluence zone. We had a target zone, we have a psychological level here, didn't retest, but it respected, it held. Now we can expect prices to go to like 139,500, maybe 140 in time. Okay, Japanese yen is weak. The US economy is strong, or at least much stronger, and USD, or the US dollar, the currency itself, is much more safe haven. US 10-year yields are going higher, so that's only positive for USD JPY. So let me go to Euro GBP. That's a GBP pair, Euro GBP. So let's see. Wow, that one is trending very nicely. We had a nice entry right here. Whoa, that was today. Nice entry today. Probably nobody took that one. But yeah, perfect entry, blown through that target zone. So what to be expected now, huh? Let's go to a daily target, or a daily time frame at least. There is one reason I don't like to trade Euro GBP, and if you look to the last few months, I mean, since like February until now, it's only been consolidating. So it's very dangerous to trade this market. And why is it consolidating? Because you have the Eurozone and you have the pound, or at least the UK, and they have a lot of fundamental drivers that are the same, right? And right now they have the same problems, the same energy crisis problems. So it's really monetary policy that is diverging them right now, and they both are in a very bad situation. So just fundamentally, to make sure, fundamentally it doesn't make a lot of sense to trade this. Technically maybe it does, but on a longer term time frame it doesn't. Going to a 4-hour time frame, so right now we know it's trending nicely. Basically it broke out. It wasn't a downtrend, right? It was moving down, correction. Was this a bigger time frame selling zone? No, it wasn't. Here it was. So here it should have gone down. It didn't. So now it broke up. So that's a sign that the market does want to go up. So this was down, correction, very long correction. We expected this to go down. It then went down, and now it's breaking higher and with a lot of strength, right? It's going very aggressively. The 21 EMA is where I would try to take this. If the drivers and the fundamentals that are pushing this higher are staying the same, this will correct, but it will correct very slowly, or at least very rapidly, but very shallow, right? It won't go very deep. We can look at this high as a possible reversal point, but that's very, very aggressive, of course. And this is the most recent one, okay? Basically this is the most recent one, but it's too small for me. I don't like that. I like these two guys here, right? That's what I would be looking for, but again, it's moving very aggressively. I'm gonna remove this one because that one's gonna mess us up. The 21 EMA could be here, so yeah, an entry right here in that pivot next week could be a very good entry. But other than that, very dangerous markets to trade. We are in overbought. There is no divergence yet, so wait for the correction. Wait for market to go below oversold, okay? And then try to find the end of the correction right here, which will be somewhere in here, right? Maybe that 21 EMA, maybe that 50 EMA will be here and touch that one, but I don't think so. If the market has the same drivers, it will probably just bounce from that 21 EMA, which is right over here and very close, very nearby. Does that help a little bit? Sharing my view, Chris. Wow, look at that, UK 100 is tanking. Anyway, guys, I have visitors at my home, so I'll need to wrap up the call. Thanks for watching. Thanks for getting involved, asking questions. I appreciate it. Don't forget to like the chat or like the live stream so it can be pushed out to more people and we can grow our community of traders much faster. Great. Thanks, guys. I appreciate you, and I'll talk to you soon in the Discord. If you have any questions, let me know. See you later, guys. Bye. Have a good one. Bye bye.